Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 18th of December. Starting off with the FTSE 100, which has regrouped itself a little better in the sense that we've had a bounce off the 200-day line, 75.60. Above that, looking for this market to once again break that February resistance line, 76.30, and then maybe head up as high as 7800. Possibly by the end of this month if we can get any Christmas cheer, but I suppose the main thing is to get through 76.40 over coming days. Moving along to the DAX, and the DAX has been obviously a much better performer than the FTSE of late, but does look as though it's getting a little bit tired. It hit the top of that broadening triangle from May, the red line there, 16,900, is coming back. We're hoping for support to come in around the July resistance, 16,500, before this market then regroups and then will maybe possibly heads as high as 17,900 by the end of next month. Otherwise, we're in the run-up to the golden cross between the 50 and 200-day moving averages, just a few days away now, probably by the end of the week. Below 16,500 would then risk 16,000, which obviously would be rather disappointing. Moving along to the Dow, and the Dow ended the week on a very strong note and probably getting some people concerned about what a rally we've seen. Here, our best case scenario target was around 37,700, and we're not too far away from that. Might expect a bit of a retracement if we get an end of day close back below 37,000, but not really much in terms of support, given the big leap that we've had recently before 36,300. But at the moment, just looking for this market to nudge that 37,700 level. Moving on to Bitcoin, which is I would say struggling, but trying to find its feet above the 40,000 level. Here we've broken out or below the floor of that rising trend channel from back in October. That means there's the risk of a test of the 50-day moving average and old November resistance, 38,500, which would be rather disappointing. Ideally, we managed to turn around on the right side of 40,000. You can see the RSI uptrend line, which has been in place since August, has been broken, and therefore that has been a successful leading indicator on a potential retracement for this market. Gold, almost as volatile as Bitcoin at the moment, still finding a hard right shoulder there at 2060, expecting a pinball sort of price action between the 1995 area and the 50-day moving average and 2060 over the near term. On to the stocks, and starting off with Ananda, and here it's the first signs of a turnaround there from the lows, a bear trap from below the old March support there, 0.27, and we've also broken a resistance line there and the 50-day moving average at 0.28 pence for the first time since back at the end of June. About 0.27, looking for the shares to make progress within a rising trend channel base at 0.38 pence by the end of next month. I've covered chill quite a lot because I think it seems to be quite an interesting mix between technicals and fundamentals. Here we've had a bear trap rebound from below the September support there, around 3.3 pence. Above that, we've been looking for 6.5 pence by the end of next month. It looks like it might be a bit quicker than that. Ideally, we stay on the right side of that 50-day line at 4.75 pence ahead of that move to 6.5 pence, which could even, I suppose, happen by the end of this month, given the way things are going. Conroy is next, and here it's given us our classic turnaround with the unfilled gap to the upside, rising 50-day moving average. That suggests that we should at least be able to hit up to the 200-day moving average at 23 pence, and maybe up to 30 pence by the end of next month. Next stock is one which has been in the papers and been everywhere else in the recent past, DG Innovate, and through the one of our sort of the second last target there at 0.19, above 0.19 on an end of day close basis. We're looking for a move up to 0.4 pence, perhaps as soon as the end of next month, which is a 2021 resistance line projection. At this stage, only back below recent support around 0.15, really delaying the upside scenario. Moving on to EQTEC, which has been rather painful for the bulls over the recent past. It may continue to be so, but at least the first glimmers of a turnaround within a falling wedge base, bullish divergence there versus the September RSI lows, Initial target here up to 0.04, but ideally we at least get back up to 0.05 and the 50-day line over the next few weeks, ideally maybe even by the end of this month. If you're cautious, you wait for recent resistance through 0.033 to be broken before assuming 0.05 is on its way. Rather esoteric choice next, Eden Research, and here we've had a bear trap gap reversal, which is one of our favorite signals, rather largely because it's the most reliable one, or one of the most reliable ones, and bullish divergence as well. We've broken the 50-day line and that September resistance line. That means we're looking for 5.6 pence by the end of this month, maybe going to January, but could be as soon as that. E-Star is next, and it's been shaping up quite nicely over the recent past with a V-shaped bull flag breakout, or a U-shaped breakout, I suppose. Here, 1.6 pence, the old high in November. Above that, we're looking for 2.6 pence by the end of next month, or even sooner, especially given the way that the 50-day line is now rising. Haven't looked at N4 Pharma for a long time, largely because the shares haven't been that hot, but we have finally broken out of the falling wedge the shares have been in since July, and broken above the 50-day moving average at 0.84. Above that July resistance line at 0.92, looking for up to 1.7 pence by the end of next month, and at least trying to fill that gap there up to 1.4 pence left from back in September. Good to see Pantheon reviving itself over recent days. We hadn't had an announcement there for quite some time, and we got one last week. Here we've broken out of a falling wedge, broken the 200-day moving average, and we're just touching the 50-day line at 23 3/4. Above the 50-day line, looking for 32 pence by the end of next month as a best case scenario, but initially 26 pence, hopefully later this month. One of the more pleasing reversals of the recent past has been power metals, and here we've got a bull flag breakout, quite a tight one, which is always good. 0.8 the top of that flag, and we've broken through that. That means we're looking for 0.9 pence, perhaps as soon as the end of this month. Ideally, we stay on the right side of 0.75 in the meantime. One of the most difficult stocks around to chart is RC65, and although maybe one would feel that one might want to shy away from it, we've got a falling wedge breakout from through the 9.5 pence level. Above that, looking for up to 17 pence by the end of this month. Interesting news today from Valereum, and that sort of follows on from the recent recovery in the shares. We've got a mid-move consolidation breakout there through 4 3/4 pence. The longer we stay above that, the greater the chance of a move up to as high as 7.5 pence by the end of next month. The 50-day line already rising quite nicely. Finishing off with Wildcat, and here you can see that shares attempting to break out of the recent triangle formation they've been in. We want to see basically an end of the day close through the 0.2 pence level. If we can get through that, then we can possibly retest last month's resistance at 0.27 by the end of this month. That's it for me today. More updates tomorrow.